Good, thank you very much. Hi, morning everyone. So just to follow up, yes, the industry is moving forward. So I guess you've seen the news today, and the tariff is kicking in. So we start the day minus 15. It's a good discount to get into the market, and so we're gonna speak about that because crypto. So I've been running crypto and investing since 2017. Been through many cycles, and one thing I learned is to keep in mind the big picture. And market grew, doubled over a year. So the market cap was 1.6, 1.7 last year trillion. We are close to 3 trillion this morning. It was a bit higher yesterday. So it was a real double yesterday. So what's gonna happen next? So I'm very happy and humbled to have a stellar panel with me to explain you where is the alpha in the altcoins. So they all run PE, VC. So now we got even PE coming in the market. So the market is really maturating, becoming way more institutional than before. We've seen that with BlackRock ETF coming in, bringing crypto to the world. And we're going to speak infrastructure, real-world assets, ZKs, and everything around. So I'll let you introduce yourself, everyone, please. Jake?
I'll start, yeah. I'm Jake Lynch. I'm a partner at L1D. We're a multi-strat fund based out of Zurich. We manage a little bit over $500 million and allocate across different verticals such as fund of funds, venture direct, and some liquid strategy.
Hi, everyone.
Yeah.
Thanks. Hi, everyone. My name is Cunha-Gomes. I'm a co-founder of Feria Partners. We hope to be one of the first control strategies in this space. So Carl mentioned private equity. We're hoping to be one of the first PE funds in this space. PE has a bad rap for it. We're going to call it collaborative investing. Look forward to telling you a little bit more about that. Effectively, we look to bring capital, but operational capacity as well, to the businesses that we invest in.
Hey, James Newman, co-managing partner and general partner at Republic. Republic's a Web3 infrastructure investment and advisory firm. I run the flagship venture fund there.
I'm Diana Biggs. I am a partner at 1KX. We are a crypto native venture firm investing across the board. It's founded in 2018, and I guess broadly we invest across infrastructure, middleware, and consumer applications.
Thank you very much. So what we've seen so far is Bitcoin leading the race, outperforming most of the alts. If you look at the CCI 30 was like up maybe 78% last year, Bitcoin 121. Whereas there is a lot of very interesting projects to look at. And now the big catalyst for this year, of course, you got the Bitcoin reserve we can touch on. And we can speak maybe with Jake about what were the catalysts last year and then jump on the fact that we want the whole world to become tokenized, and Larry Fink was speaking about it not long ago. And when you think about the U.S. Treasury with nearly 1 trillion volume traded every day, what does it mean for blockchain after that? So I'll let you start.
Yeah, I think last year was really about expectations. This year's seemingly about reality. The expectations were, leading into November, it was very hard to position them in the market with the uncertainty. And then as soon as the Trump administration got elected, it just felt like everything good could happen. Most people in the space kind of felt like an abused child who then gets moved to a nice home. It's like you almost want to deny what's happening in terms of the good things. And then, of course, this year we have some different catalysts. The tariffs are obviously a negative catalyst, but the possibility of the SBR is, quite interesting.
Good. So in terms of, of course, bringing bonds, equity, probably real estate in the short term into blockchain. So it's something big. But what do we need in order to get there? Because we see blockchain like Ethereum, which is really underperforming the market compared to Solana. So what are the rails for the real world asset to come on chain? Jake, you want to?
Yeah.
James, sorry, you want to take it?
Yeah, sure. Obviously, tokenization is a huge topic, and in terms of putting a VC hat on, there's a wide set of verticals in which you can invest in. For example, most people talk about distribution, and everyone sees that the democratization of finance, allowing access also towards asset classes that maybe were not accessible for many people, or portfolio diversification. Things like VC, private equity, hedge funds, and access into these type of investments which aren't normally accessible for most of us unless we're high net worth individuals. I think that's a huge benefit for the sector, and obviously it's going to create a number of different investable opportunities. When you think about the institutionalization of the space and tokenization, there's also going to be extra businesses created that are both investable but also help the sector. For example, KYC, AML, sanction-focused processes on-chain. These are very, very important to progress tokenization further, not just the tokenization of bonds or the tokenization of cash on-chain. I think the last point about tokenization here is that we've seen stablecoins move from, call it POC or MVP, towards call it at-scale deployment. So things are escalating, there's investment, and we're seeing real-world use cases here. And I think in terms of a lot of the funds that are being tokenized on-chain, we're going to start to see POC and MVP there move towards actual real-world use cases and more investable opportunities.
Thank you. Yeah, go ahead.
Thanks.
Diana.
Yeah, well, I think one of the most interesting and exciting times also, like facts now about this time, where we're moving from a very adversarial policy environment to one that is actually open to embracing and looking at the innovation possibilities of this technology, is that we can move away from what we've been as sort of like two parallel or like separate tracks of institutional adoption. And at the time, people were doing a lot of experimentation with private chains, which is not so scalable. And sometimes I think about this as back to like the early 90s when we have the internet and a lot of corporations were building their intranet sites, whereas of course the internet is where you have all of the potential for interoperability, scalability, and really taking into account the benefits of the technology. And we're actually starting to see this now. So we predominantly invest only in sort of like, we see blockchain technology as a tool for changing trust to math and code, and to therefore sort of provide economic incentives for open source software. And so that open source software can become the infrastructure of the internet and of these tools. And now we are able to see institutions that are moving on to public chains, and that's where it becomes really interesting, and that's the entire point of the technology as well.
Yeah, that's a very interesting point to see now TradFi coming to crypto. And and we had a conversation, Neil, yesterday. So it's interesting to see, okay, what's going to be the next move? What's going to be the exit, for instance? Because that's the thing. So you can invest in alts and find those projects, this infrastructure, but what's going to come next, and what would be the liquidity events for companies?
Yeah, absolutely. Okay, it works. So basically, if I think about some of the stuff that James just talked about, right, and actually Diana as well. So if you think about tokenization, a lot of institutions coming into the space, there are various routes that folks are sort of looking to bring real capital, real assets, real energy and activity on-chain and sort of merge Web 2, Web 3. A lot of that relies on some of the infrastructure that actually you, James, mentioned. So compliance software, tax software. There are a lot of quote-unquote boring businesses in this space that are infrastructure businesses, and that's really where we're focused, step one. Why? Because that needs to scale just as the ecosystem develops. And there is a scarcity of capital that goes towards these businesses. There's a scarcity of these businesses in the first place. They need some professional help. They need some capital to be able to grow and meet the growing demand of the two worlds colliding. When we think about exits, so far the VC landscape has looked at tokens as the easiest or fastest path to liquidity. And besides Bitcoin and maybe a couple others here and there, altcoins haven't really seen the same rally that everyone expected, and I think a lot may still come, but it's an uncertain exit. When you look at these infrastructure businesses on the flip side, they don't necessarily have tokens. They don't necessarily have a need to issue a token, although it would be a path to liquidity, and some are prompted to do that by some folks in their cap tables. In many cases, you just haven't seen the exits of these real businesses. And that's really where we're looking to change some of that dynamic and help build some of these businesses into companies that an S&P, a NASDAQ, an Equifax, an MSCI might consider buying at some point in the future, not worrying about the cycles of when the IPO markets are open and hot, but actually looking at, here's a financially accretive corp dev acquisition. It happens to be in this space. It's a real business, produces real revenues with real customers, but also real profits. And you can look at things like free cash flow yield and old school metrics that people sort of hide under the rug for right now.
Okay, so now we all agree on the fact that blockchain technology is going to be adopted. Traditional players going to look for it. So what are we lacking in order to get there, to have a full steam institutional adoption of the technology, to be able to trade tokenized bonds on the blockchain, to have smart contracted transaction? So what do we see now? It's Ethereum, so which used to have all the dApps built on top, is not used as much as it used to be. So we can even see Trump launch his meme coin on Solana, which is more centralized but way more efficient. So what these protocols are lacking in order to be able to have 1 trillion transactions a day? And what are the applications which enables to improve this technology for everybody to be able to use it?
Yeah, I think first you need the demand, right? Today, the demand isn't there for that type of capacity, and so innovation kind of lags demand, right? Once there's demand, you innovate and you create the solutions for it. There's a bunch of challenging L1s that are coming out this year. So Berachain coming out today actually, and Monad likely going to testnet in 2-3 weeks. These are definitely like innovations on the technical front there. But when it comes to the institutions, to me, it's really just a matter of time. I think when you look at something like SAB 121, which is getting repealed, which allows banks in the US to put crypto on their balance sheet for the first time ever, this is just some essential things that haven't been in place that have prevented institutions from fundamentally entering the space. And so, it's not as if the institutions from day one will need 1 million transactions per second, right? Visa's not going to entirely onboard their payment system overnight. What you do need the institutions to buy in. And you need the financial commitment to be there in order to start to deliver those solutions.
Okay. So I agree with you, but in terms of demand, for instance, you take an investment bank to have a settlement done within a couple of seconds on blockchain, would save them a lot of money when you think of high interest rates. So what I'm hearing in what you say, so it's getting back to regulation. So as it's still not regulated, we don't have the demand yet because we can't touch it. So what do you think, guys, would be so Trump is in office, so US gonna regulate crypto, this is what we hope for. But it's been regulated in the Middle East already very well, in Dubai, Abu Dhabi, Hong Kong, Singapore, who are fighting for the Southeast Asian markets. Europe is a bit regulating differently, over-regulating as Europeans love to do. We got the FCA here doing something as well. So what do you think about regulation? Where those companies should go? Do you think now that companies who were leaving the US to go somewhere else in the Middle East, for instance, going to keep going there because it's very friendly ecosystem, or the US going to lead the race?
I think you make a very good point there. It's all about regulatory clarity, and where that is clear, in terms of jurisdiction, you're going to see inflows of the best talent, best capital, etc. Going back to your original point, I think the 2 or 3 things that are missing is encryption technologies, so that you can obfuscate transactions, privacy. Institutions need privacy. You can't have certain transactions being completely public on chain if you're trading hedge fund or a counterpart versus a bank. So these are the things that are needed. Whether that's on or off chain is a question that can be answered, and that will arguably fall under that regulatory umbrella as well. And lastly, on-chain identity. If we're looking to push forward in DeFi, there needs to be some level of identity of transactions or walled gardens being created. And unfortunately, while this is against what crypto was there for, institutions are going to use this technology in different ways. And we just need to be cognizant that the technology also needs to fit inside the regulatory umbrella that is for traditional markets, especially if traditional securities are being transacted on new rails.
But I think using some of these technologies, there's also a really fantastic opportunity for regulators to be able to benefit from some of the aspects of it, and that's where we're seeing interesting applications with zero-knowledge technology, fully homomorphic encryption on-chain. These can provide the institutions with the privacy that they require for their transactions, while also providing the assurances that are necessary to the regulators.
Yeah, I would go as far as to say that like the infrastructure is there to handle these solutions, right? The privacy infrastructure is there. The KYC and the walled garden parts are there. Uniswap v4 just launched, and Uniswap v4 allows you to essentially create hooks on transactions, so you could refuse a transaction if it was coming from an OFAC sanctioned list or something like this. So we've been building the infrastructure. It's kind of been a joke in the industry, like the institutions are coming and we'll build the infrastructure for them for 3 cycles, right? This is 12 years, and it would be embarrassing if we didn't have something to show for it. And like we genuinely do, right? The ZK technology is now usable. Abstract just launched on ZK Sync, and it's a fully usable chain. You wouldn't really even realize that you're using breaking edge technology while you're doing it. And in addition to that, Uniswap v4 just launched and is fully functional, right? And these are the essential building blocks that institutions need to feel comfortable in transacting without getting themselves into hot water from a regulatory standpoint.
Good. So, okay, everything is here. The space is more institutionalized, so this we can agree on that. And speaking about the infrastructure, it's not only on chain that everything is efficient and working, and people can start to interact, and you can't worry about money laundering or being exposed to something. You got chain analysis now working, analyzing all the transactions in the markets. And when you look at, in our universe, we look at the liquid strategy side. So we touch a bit on DeFi, but mostly what we need is a very strong prime broker, which we have now. So of course, the space doesn't allow Goldman Sachs or Morgan Stanley to directly act as a prime in our world. It's slightly different, but we got primes, we got good exchange, we got custodian. 95% of the transactions are done off exchange, with off exchange settlement nowadays. So all the problems we had prior 2022 have been solved. But what I would argue on is we got good projects, blockchain are efficient, but we didn't have the catalyst like DeFi Summer 2020. So there is a lot of alpha available in the space. But you don't look at it as an index. You need to be an expert to find the next company protocols to be funded. And I would like to deep dive into that. Where is the alpha? So what are the DK you're looking at, the DePIN project? And yeah, if you can build on that. Who wants to?
Diana, you want to start?
You want to start?
Where is the alpha? So there's a lot of areas, as you mentioned, to invest across, and we're investing across the board. I think it always comes down to finding the best talent and the best founders, and then backing them in terms of what they're building. So we're seeing that. We're seeing like a lot of really interesting things that are being done. And we like to get in. We're predominantly a first check firm. So we really love to find these founders when they're just at the idea stage. New areas of like new possibilities that we haven't even really uncovered what is possible with this technology and kind of what new world it can unlock are things like fully on-chain games. We've been investing in the consumer space super early, and I think we still are actually very early there, but we're seeing these applications now come to life because, as we've said, we have the infrastructure. So I think that's a really interesting world to see what's going on in terms of like a new kind of social. Like no one could have predicted an Instagram or Facebook really, and then when you think about being fully on chain and having these economic layers as well, it's going to be some completely new paradigm. So we're looking for those founders that are really experimenting in these areas and something that will unlock there. Also looking at AI agents and how that combines into crypto. So this combination of crypto and AI, where we can actually give, now we have the technology, and quite a number of projects in our portfolio are working on this. looking at like really empowering these agents. They'll have a wallet, they'll be able to do transactions. I mean, blockchains are now programmable layers, so you can actually program and have active agents looking on. And I think that's where we'll also see a very interesting crossover with traditional finance, because we're able to, in the crypto world, experiment with these new types of technology. And when they come together, and that provides an infrastructure layer also for TradFi, that's going to be really exciting.
Yeah, there's this really interesting like convergence of all these sectors going on, where historically we used to look at these sectors independently. Some people would prefer DeFi, other people would be AI focused purely, some people would be gaming focused solely, and now what you're starting to see is all of this tech become very, very usable, and so you're able, as maybe you're a gaming founder, so you're able to both utilize innovations in DeFi in combination with innovations in AI, right? So like an example of this would be, you're playing an MMORPG game. These games, traditionally gross massive amounts of money in the hundreds of millions to billions. And one of these games could theoretically be entirely populated by AI agents, right? And these AI agents are using a marketplace and transacting among each other. And as a player, you're not even aware of the fact that you're surrounded by these AI agents, right? It just looks like a very popular normal game. And this is what's interesting about this is a really strong way to bootstrap a game, because if you look at what gaming founders deal with, one of the biggest issues they have is, the first people to the game get there and there's nobody around there, right? It's like going to a party and being the first one. This is like a hard bootstrapping problem. And so what you can do is you can make these people feel comfortable by having, activity around them that is fundamentally just AI activity. But it really levels it up. It really helps you get past that first phase.
And it's more so because these bots are actually agents. They're autonomous. They're also acting. So it's not like it's I don't know, what do you call like an NPC or
like an NPC, a non-player controlled character, like where they just stand there and they tell you the same thing when you interact with them constantly. That's not so fun. But when you go back to it and it says, "Hey, I know your name. How's your family doing? Last time you said you were buying this coin. What do you think about it now?" You start to lose the idea that this is perhaps, you start to believe that it's a real person.
Good. Thank you very much. So this is part for the liquid side and where it's moving. Where do you see the M&A market? Will we see a new IPO this week, Neil? Like, will Kraken finally get early investor, bring them liquidity? What's your view on that? Because now we got very mature company. We got I don't know how many unicorns we got in the space, but quite a few. Signum just made a massive round, reached the status. Eden Road is also $1 billion company. So where do you see the activity going there?
I think there's a really interesting set of discussion topics to be had around that, because on the one hand, you have some of the most profitable companies in the world now coming from the space, right? So you saw Tether's recent print, $13 billion of profit last year. People are pulling all sorts of stats out there, profit per employee and things like that. But fundamentally, if you look at what blockchain does, what crypto does, is it decentralizes a lot of the cogs away. And so you get gross margins in some of these businesses of well north of 90%, which is best in class and best in class for SaaS. And SaaS was the old flavor of the day in the last, tech, at least Web 2 tech cycle. And so what you're really able to do here is build very profitable businesses. And then you start to see Kraken and others start to post results more and more publicly. Why? Potentially because some of these folks are looking for liquidity for their early investors, their employees, their shareholders. And I think that's all very possible now, right? So part of it depends on market timing and the IPO markets being open and receptive, public market investors being educated and receptive to holding assets in the space, which I think through the last crypto cycle, through 21, you had more awareness of the space. Now you have more acceptance of the space. And so I think it's a matter of time, and people will start to reveal that they have many more investments in this category, and then actually are more open to buying public market investments in this category. There are already tens of companies that are publicly traded in this space. It's not just MicroStrategy. It's not just the Bitcoin miners. There are some on-ramps. There's a whole bunch of stuff out there. People just don't touch it. But I think they will, more and more as they start to understand exactly what this space is about. But I think a lot of that really comes back down to fundamentals and saying, people are building some very profitable companies in this space, and you can say that meme coins are folks day trading and not really caring about fundamental value, the infrastructure businesses supplying some of those activities make 9 figures plus of profit per year, right? So forget Pump.fun, which some of you will have read about. If you look at Deck Screener, right? So it's a tool that people use to find the next meme coin by looking at data on-chain about who's buying what, when, how much, what size, who's selling when, because that's also a very important indicator. Some of these businesses clip small spreads by aggregating demand from people and routing orders through other people's technology, because it's all composable, modular, and decentralized. But some of those businesses are making tremendous amounts of money. Look at, Polymarket has been around for many years. All of a sudden becomes very, very popular in the forefront of the media as the Trump election sort of hit full steam. That's a very well adopted business. People know it, people use the website here and there, and it turns out they have a lot of profit potential as well. And so you do start to see real equity exits being possible. I think there's a category of large businesses, Krakens and others, that will be more easily accepted by larger public market investors. And there's a category of small to medium-sized businesses which are unfortunately subscale. If you're $20 million of revenue and you have nice statistics about you, a large asset manager is not going to care just yet because it's not substantial enough for them to care about, right? They can't deploy $500 million into such a business. Those are the businesses we're going to go for because I think you can then build them up to their Kraken status. You focus on profit potential. You focus on what some of the the best parts of this technology bring about, which is really decentralizing COGS, really using new, cheaper rails to save on costs, frankly. And I think you do start to then see a merger of Web 2, Web 3, but people just say, look, it's just another tech company, it's going public, or it was bought, and it becomes much more accepted and understood that it's just another innovation.
Good, thank you. Thank you very much. So that's good to hear, and to make people aware about the fact that, okay, when you speak meme coins, in fact, you can make money out of it by being an expert, having a good understanding of what you can touch, what you can't touch, because they are the outperformer of last year. From far. We've been asked even if there are some funds tracking meme coins. You just spoke about that. And NFT were a big theme last cycle. So now we see application around restaurants distributing NFTs. So what you guys do think about that? And
so actually, I was going to say one thing, but I'll also touch on NFTs. A lot of those businesses are very pro-cyclical, right? So if meme coins cease to be a thing, those businesses cease to have those profits, right? And so it is important to be a little bit diligent in figuring out which businesses are pro-cyclical, which ones are acyclical. And I think that's going to be a very important factor in determining, how much you're bringing forward to those future cash flows, let's say. But away from that, NFTs, just because you mentioned it, there's a business that's supplying the ticketing for this event. Yep. It actually is an NFT ticketing business. These tickets are not NFTs necessarily. It's a Web 2 business that started off in the event space. It's called Oveit, O-V-E-I-T. And it's incredible. I've been close to these guys for maybe 5 years. I had no idea they were actually the vendor for the tickets that we all have here today. But Polygon found them a few years ago, got them into NFT ticketing. They supplied these to a few crypto-focused events. And you don't need to know whether your ticket's an NFT ticket or not. If you care about it, if you care about transferability, if you care about, all the things that people got excited about with NFT ticketing a few years ago, it's kind of here, it's just in the background. And I think that's somewhat nice, right? You don't need to see everything as, oh, this is a crypto business or it's not.
That's definitely more focus for me as well, the infrastructure behind some of the actual applications. I think this year we're going to see a lot of kind of hide the rails, i.e. you're not going to know that there's a blockchain behind it, you're not going to know that there's an NFT, you just have that immutability in your wallet. I think that's incredibly important for 2025.
And I think what was exciting was one of the first crossovers of that of not really even having to mention the word NFT was Pudgy Penguins. So one of our earliest investments in the consumer space. They started as an NFT collection and now have expanded. They've launched Abstract, which Jake mentioned, which is a consumer chain. When you're playing on Abstract now, it's live. You can test it out. It's just like you're in any kind of gaming, sort of live stream, web streaming space. So the UI is getting much better. Pudgy were a project that did it really well. They never even had to mention NFTs. And you can go to Selfridges and buy the Pudgy Penguins. They're around in toy stores. There's the physical objects that then interplay also with the gaming world online. And it's kind of this merging of the digital and the physical into a real IP brand where you don't need to be aware of what an NFT is at all.
Yeah, with these things, you mentioned how NFTs were the speculative asset in the last cycle. This cycle, it's been meme coins. these things are just examples of how essentially you have like this speculation fueling innovation that just gets turned into something that becomes usable, right? You need some reason to fund the infrastructure that builds it out, that makes it usable. And meme coins to many people are worthless or frustrating or annoying, or to some are their life savings. But at the end of the day, what they're really evidence of is the fact that you can have massive activity on chain, you can have massive issuance of tokens. It's as easy as clicking 2 buttons. Anybody can do it. And that's something that, fundamentally you have to admit has changed over the past, 10 years with crypto, is the ability for literally anybody to do this.
Right. So now I'm sold. I know there is alpha. So where is the money coming from? So we all got LPs, and capital raising has been very tough in 2023. What we do realize in the market is the biggest fund out there are venture capital fund. If you take the top 10 fund with more than 1 billion AUM, it's not liquid strategy yet, and they are all venture. So where, guys, do you find your investor? It's you got very different profile from Southeast Asia or from European investor, and so maybe you can build on that. Where do you see the traction? What are they looking for? So one of the first thing is, of course, it's a very volatile space. So as an institution and a big player, you don't want to deal with volatility. So one way to do it is to give your money to a venture capital fund. And but yeah, if you want, you want to start, James?
Yeah, of course. I think to start it off, funding's generally been quite tight, and there's obviously been a number of reasons for this. I would say when you think about the market for investing in crypto, you've really got 3 parts. You've got venture, you've got liquid, and then you've got, call it like quant, non-directional. And each of those have different levels of risk and different levels of reward. Now, in liquid funds, your benchmark is clear. Your benchmark is Bitcoin. And if you're not beating Bitcoin, then your LPs are going to look at you for that. Also, you have yields at 5%, so your hurdle rate in terms of what you're looking to achieve is also higher. And that also applies to the venture side of stuff, which is your hurdle rate. On the quant side of stuff, obviously you have better sharps, Sortinos, etc., but lower, more consistent returns. And on the venture, you really need to have that right tail convexity, which is your 10, 20 X's in your portfolios, which obviously then comes down to LPs demanding significant concentration on certain investments, minimum check sizes. Otherwise, you could have a winner in the portfolio and it only returns a small amount. If we look historically across the previous cycles in terms of the DPI that a lot of funds on the venture side have returned, it's actually outside of a few vintages not been particularly great, which has meant that a lot of pre-existing investors haven't come back into certain funds and haven't rolled things over. We've all talked about institutions coming, but for the funding side of stuff, they're not just yet there. And those that have been involved have often been burnt. There's obviously a number of names out there in the market that have taken serious reputation and other risks. That being said, people are exploring it, and it's a step-by-step process. For example, the fact that a lot of institutions and states are putting Bitcoin on their balance sheet or doing strategic Bitcoin reserves in their own states is positive. That's the first step. I only envisage that developing further, and then these institutions moving more towards the venture and the quant side.
Yeah, as James mentioned, what we're seeing in the market from the fund-to-funds perspective is there's huge disparity in returns. And historically, it was just enough to be in the market. You had to be positioned, you had to participate, but there was allocation for everybody in pretty much everything. People weren't allocating often, and so you could get into competitive rounds. And as long as you were in the market, you performed with the market, right? On beta or above beta, depending on what you're using for a benchmark. Today, we're starting to see a huge disparity in those fund performances. It's more obvious on the liquid fund performances because they're marked to market on a monthly basis. But the venture fund, it very much so is the same story, where asset selection is kicking in. And you're starting to see people outperform on asset selection. And this is a sign of maturity, right? Not everything is going to succeed. But it's also a sign that active investing is very much so the right area to be in today. We prefer the liquid side, but these things are very cyclical, right? And so as the liquid side looks more attractive today, you're going to see a lot of managers move over to the liquid side. The venture side will become less competitive. And as James mentioned, you'll get less allocation from LPs. And of course, that will become a more attractive vintage, right? So you have to really follow the cyclicality.
It's actually a great segue because we've been out raising capital for about 4 months now, and we're speaking to your sovereign funds in the Middle East and Asia. You're asking about geographies, pension funds, university endowments in the U.S. and Canada as well, and then a bunch of family offices around the world. And step one, they see Bitcoin price run up, and they have a very similar feeling. They're like, well, we're more focused on liquid strategies, which really just exacerbates the lack of funding for some of the real businesses in this space, which just really goes to what we're doing, which is, arguably 9-figure checks into very few companies because a control strategy is not scalable. And really asset selection, to your other point, focus on figuring out exactly what we want to back, providing that capital, which, by the way, beyond Series A, there's really no capital in this space at all. And I mean, away from tokens, there's really no capital in the space at all. And so scarcity of capital creates really big opportunities. So we think we can get venture-like returns with lower downside volatility, so you don't have the venture risk. We're able to go after few assets and size, which means it enables us to speak to bigger LPs. And they're actually very curious. But like you said, they're very much waiting on the sidelines, very focused on liquid strategies first. That capital will come. And I think they just need to see something real to invest in, as opposed to a spray and pray strategy, which hasn't really been the case, of course, and early investments did well when the playing field was smaller, but there's so many projects these days, it's hard to figure out what you want to invest in the early stages, that when you go to the mid-stage companies, you can see real businesses. That gets exciting for them. They start to really understand this and look at this from a Web2 perspective.
Good, thank you very much. So now we are running out of time, so just one last question for you. What you look at, if there is one thing to bet on in 2025, what would it be? Who want to start?
I think my biggest bet is definitely on gaming.
Diana?
One bet. I think it's going to be a really exciting year for ZK.
Good.
I think AI and AI agent ecosystem.
And for you, what would be the big exit, the big M&A deal?
I was going to say you got to bet on us, back ourselves, but it's really our strategy. I think there'll be more and more M&A. So as a theme, to be able to go after real businesses and acquire them at really good prices, I think that's a really huge opportunity this year.
Okay, good. So M&A, AI, ZK, gaming. So they are the theme for 2025. Thank you very much, everyone.
Thanks all.